The second wave of the COVID-19 pandemic is a fact, and obviously that's bad news for the global economy. We see that the number of cases is increasing globally, but in particular in Europe. And obviously there will be negative consequences for the economy because many governments are opting again for lockdown measures that will close some particular economic activities and that may slow down in particular the further recovery in the global economy. Now, actually, that recovery was taking off quite well because if we're looking at the third quarter growth figures that are coming in, they're actually exceptionally good. For example, if you look at the euro area economy, well, that economy grew by 12.7% in the third quarter of 2020, which is, well, an unprecedented figure. And actually, we see similar figures in other places in the world, for example, in the US as well. So clearly we have seen that the first wave of the pandemic and the first lockdown period was followed by a very steep recovery period. Now, obviously the question now becomes what will follow the second lockdown period and the second wave of the pandemic. And in Europe, we expect that this second lockdown period may last longer than the first one. Obviously, it's more limited than the first lockdown period because we learned from the first lockdown period and certain economic activities can still continue because they can adapt and they can take precautionary measures and so on. So ultimately, the question is, well, if you have a longer but milder lockdown period, what will be the net negative impact on economic recovery, on economic growth? And therefore, we expect that, well, until mid of next year, there will be some slowdown in the global economy, in particular in the European economy. And we have to wait till the second half of next year. But that's the general expectation that the vaccine will become available in that period. And that's the moment when the economic recovery can take off again. Now, we see today that especially the European economy is hurt. But within Europe, there are quite some differences, as always. We see that some countries are hit more than other countries, first of all. But in particular, we also see that countries are taking different approaches to the lockdown, to the new lockdown. For example, you see in countries like Germany, there the impact of the pandemic is milder, and moreover, the lockdown measures that have been announced are more limited. Whereas in Southern Europe, you clearly see that the pandemic impact is stronger and more lockdown initiatives are being implemented. So definitely there will be differences across European countries again. Looking at other countries in the world, we see in particular in China, there the recovery took off very well after a strong second quarter. There was another strong third quarter. And actually, as a whole, you could say that the Chinese economy left the pandemic behind it already completely. Obviously, that's good news for the global economy because we all benefit, for example, from a higher demand from China, for example, for European products. In the US, there you clearly see that the pandemic also has an impact. And the pandemic may even distort the further recovery in the US economy more than we currently see. For now, we don't see that. And one of the reasons actually that there was already a second pandemic wave in the US in the summer. So actually what might happen in the US could be called a third wave in the pandemic. But for now, the impact is still milder than what we see in Europe. Obviously, everything what happened to the US presidential elections wasn't good news for the US economy because, it creates uncertainty. Also, the turmoil that may still be expected both in the streets and also in front of the courts. Obviously, that are all disturbing factors for an economic environment. Now, if you look at the markets, we see that in general markets reacted quite negatively to this second wave in the pandemic. And we see that in particular in long-term interest rates. Long-term interest rates went down again. Obviously, that's good news for bonds, but interest rates themselves went down again. They are considered to be safe havens, and that's why people go into bonds traditionally in periods where there is increased uncertainty. Now, if you look at exchange rates, we see, for example, that the euro strengthened again against the dollar, mainly driven by expectations of strong fiscal stimulus in Europe. The same might be the case in the US, by the way, but that will ultimately depend on the political landscape in the US and whether there is sufficient support for additional fiscal stimulus there as well. So still lots of question marks surrounding the global economic outlook. Nevertheless, looking at 2020, in general, we can say that in 2020, our expected growth figures, for example, will probably come true. And there is some kind of compensation between a very strong recovery in the third quarter and probably weaker fourth quarter. Now, looking at 2021, the story is different. In 2021, we may expect some more economic damage, more than we were expecting so far. The recovery basically has been interrupted by the second wave of the pandemic, and that could obviously have also longer lasting consequences. Obviously, we hope that the vaccine in the second half of next year will definitely bring some relief, but ultimately that's also still another question mark.